What? What? I can't hear you. The music's too loud. All right. Good morning. Good morning. Good morning. All right, welcome to Forex.Today, the YouTube community of more than 19,000 foreign exchange traders. Thank you for being a subscriber and all the positive contributions that you make to this community. I think it's good. I think we make the world a little bit gooder of a place. So thank you for being in my life. Without further ado, we're going to cover technical and fundamental analysis. We're going to cover gold, oil, Bitcoin, dollar, yen, and of course, whatever you want. So let's go. Woke up this morning as the miracle occurred. It's the most beautiful trade that... Anyways. Let me sip on my caramel macchiato. Hey, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. So, hey, my name is Wayne McDonald. I'm a currency trader. And what I'm about to show you today on charts, technically, is the same way I've been trading since, trading publicly since 2004. So that there's sort of the tweaks I made over the years of being self-taught was pretty much established in about 2002. Very cool. So anyway, so what that means is I might do a few things a little differently. But ultimately, the few things that I do, I've been doing consistently since 2004. There hasn't been a need to change. So if you're here to get rich quick, you're on the wrong channel. If you're here to hear about the cool new strategy that I just came up with, and it's just amazing and it makes all this money, I'm not that dude either. I don't have a cool new trading strategy of the week. Like I said, I've been doing the same thing for about 20 years. Cool. Benjamin says, hey, I bought your templates 2 days ago and you're making 1,000 pips. Well, cool. But remember, it's the market, not the template. But anyways, I'm glad that you found success. All right. So anyways, I'll cover technical and fundamental analysis. I'll do my best to address your questions. This is our hour of power, so we should be in and out before the stock market opens at 9:30. Right now it's 8:08. So thank you for being a subscriber and being at this live stream. It doesn't cost you money to be here, but it does come with an obligation, and that obligation is for you to visit tradersway.com, open up a demo account. There's a little form, bottom right-hand corner, take you less than 30 seconds. That's your obligation. I think you can handle that. While you're there, download MT4 or MT5, play some, trade with it for weeks, if not months, maybe even years. Okay? But the thing is, you're giving them an opportunity, them being Traders Way, you're giving Traders Way an opportunity to earn your loyalty and respect. Because, yes, you might like the fast execution speed, narrow spreads, big swaps, but even more important than all those things, and all those things are amazing, but even more than that, you need to have trust. You need to trust your broker. So maybe you can develop that relationship now while you're still developing your skills as a currency trader, and then when you're ready to trade big money, bada bing, bada boom, you already have an execution partner that you trust. So tradersway.com. Okay, so we is here. Whoa, oh. Okay, and I'm like, oh my God. So before going to bed, I moved my stops quite a bit. I moved them quite a bit. My 2 pound trades got taken off. And something else just came off now. Aussie, I think Aussie just got knocked out for profit. I forget how much, but anyways, for profit. And I still got a couple going, so that's good. And then I need to rebuild. So interesting time. It's the middle of the week. I wish I was getting knocked out on a Thursday, not on a Wednesday morning. But nonetheless, I'm not dissatisfied. So now what we need to look at is whether this yen strength and dollar strength are just little pullbacks in these pairs and that we, buy back in, so to speak, or if this is sort of bigger, okay? Like bigger meaning, it's the 20th of the month. We could have a week of dollar strength and yen strength as bulls are taking some profit. And then we resume our mission out in November. So we need to take a look at that, right? So it might be a day, but it might be a week that these things come down. Ultimately, every trend has a pullback. Every trend has several pullbacks. And eventually, the pullbacks will lead to like double tops and drops. For example, if it's an uptrend, right? It'll go from an uptrend to a sideways trend to a downtrend. But it doesn't happen quickly. Does anybody know how the foreign exchange market reverses? I'll give you a hint. I wrote it in my book. Wink, wink, nudge, nudge. How does the Forex market reverse? If it's not a V-shaped reversal, then how does it? Remember, you have to have sort of a mental picture so that you can calm yourself in these moments. Okay? The foreign exchange market reverses like an old man easing into a hot bath. So it'll go from very, very strong to less strong to neutral to then bearish. It's not going to happen in an hour. It's not even going to happen in a day. So cool. So we need to pay attention. Is this a pullback or is it the beginning of the process of, is the hot water on and the old man getting naked? We'll see. Okay. For those that didn't answer the question properly, you need to maybe read the book. You don't need to read the book, but you can if you want. Remember, I wrote the book and then sold it to Wiley, so it's not my book. I'm just the author. So you can buy the book if you want. It's not making me rich. All right. All right. So let's start with, I guess, yen pairs. The sharpness just knocked me out of a couple of trades, right? So let's take a look and see what is to be seen. Okay. Okay. Here's a nice little trade from yesterday. Let's go on to an hourly. Let's not do 15-minute. Okay. So here's Monday's setup. Okay. And because of that, we're out of position. And typically what you do is you hit M4 and then drop. So let's just see what's supposed to be there. So the target is 86 and some change. And we wimped out at 86 even. Well, that's kind of disappointing. It shouldn't be the bottom. So currently what I'm still thinking, okay, well, that would be a little bit too low, but I'm still thinking this. Okay. Yeah, where can you buy the book? Yeah. It's so funny. What do you mean, where can you buy the book? Boo, 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 boo. Yep. It is called Strategic and Tactical Forex Trading. Yes. All right. All right. So anyways, we're bending this 21, and I jammed my stop like I just got knocked out, right? Just got knocked out. So I jammed it in there because I think I was in here or something. So it was an opportunity to lock in some profit because I still don't know if it's going to come down harder. But I'm going to pay a lot of attention because my plan, my mental plan, my strategic analysis tells me that I can still buy this at 85.5, 85.50. Okay. So I do kind of want to do that, but I don't want to risk profit either. Right. So I'm going to try to get in this, but here's the interesting thing. If New York brings this down, and I was worried, by the way. So what I did, just so you know, on risk management wise, we had this, we came back, we had our little roll reversal, we had the 21, it started to move, so I moved my stop. Okay? Because we were in a binary situation, okay? It should go up. I guess pink's the wrong number, right? It should go up, and that makes sense, and therefore my stop is fine. But based on some other things, there's a bit of a potential for this, and if it made a lower low, I don't want to be around, right? So anyways, so that's what I did. That's what I was handling, okay? So I still think it's going to head up from here, okay? This is kind of what I gather. So today, having to come down here would be interesting, and it would change my shorter term level of aggression, but I'm still going to revert back to the 4 hour. So looking at this, I have two choices today, really. Buy it here at 85.5 or buy it at 85 or both. Okay. Simple enough, right? Simple enough. So I might be taking a break today just because this move seems like it wants to do that. Okay. That's what it looks like. Okay. And by the way, like I mentioned, this is out of position here. And so the rule of engagement is the ride the 21 on the 4 hour. So cool. That's kind of what I wanted to do. It was just I had sort of like, I just had some smaller positions I wanted to take profit on. I didn't want to risk them. I'm trying to build up. Any idea about gold? I have lots of ideas about everything. Okay. Now remember, I don't like the question, any idea, like that seems like, what sort of random thoughts do you have? Remember, what we do is analysis, either macroeconomics based on central banking or business cycle or seasonality, right? That's analysis. It's not like an idea. I'm not making it up. Or technical analysis, there's right and then there's not right. It's very binary. Technical analysis just tells you. You look at it and it removes a lot of opinions. Now, if you have a lot of different opinions, then you're not really an analyst, right? So I can read a gold chart and tell you what it says. I can do that later, Deppy, if you want. Okay. But it's like any idea? No, I'll just read it. I'll just tell you what it says. Okay. All right. So euro has come down. You see this breach here. Once again, I'm like out. Okay. This was right. Well, in this case, in this account, I'm not out, right? I'm still down in here. So you can watch this and see what the right thing is to do. But you can see as we build upon this, right? This is what we're doing here. This is right out. Okay. And I actually discussed this in the day trading group. I said, look, if it comes back down this far, that's not a retracement, that's a reversal. Maida says, yeah, a lot of ideas and a lot of opinions. Yeah. Yeah, I'll just read the chart. My favorite example is a concert pianist. They're not there to interpret how Mozart felt or how Beethoven felt and express their ideas in the music. No, it's just like sit down and play a Moonlight Sonata, play Fur Elise. Just do it right. I want to hear it. And then I, as the listener, will interpret how Beethoven felt. Moonlight Sonata was very, very, very sad. Right? Fur Elise, there's anger in it and stuff. It's really interesting. But if you've been hired as the piano player, play it right. It's on the sheet music. We don't need your ideas or your opinions. It just needs to sound perfectly like Beethoven. So when you're looking at your charts, it's like reading sheet music. There's no interpretation. It's factual. Well, it's statistical analysis of probabilities, right? But there's no vagueness. Okay. All right. It's only vague if you can't read it. All right. So anyways, Kiwi, I'm still on this sucker. I jammed the stop on this one too, and it must be very, very close right now. But the issue is, there's a good trade here, out of position, good trade here, out of position. And we're quite elevated. And I want to be going much higher. Okay, I want to go much higher. And I also want this hourly 21 to maintain its integrity. I want to see this daily move up. And Kiwi's been over the last, week, let's say, maybe 2 weeks, has been quite strong. One of the strongest. So I'm out of Aussie, but I'm still in Kiwi. And that's because of the relative strength. What's up, Sharif? Iran says, I trade what I see, not what you want or what other thinks. Yeah, well, I'm not quite that either, because I am fundamentally driven and I'm bias driven. So if I see it's bearish, it doesn't mean I'm selling. It means I'm not trading and I'm whining and dining, clients or something, right? I'm doing research. I don't know. But I don't trade what I see. I trade what I think when I see conditions are favorable. So anyways, going back to Kiwi, that's it. I really don't have anything else to add. I really want this to maintain its integrity. Okay. And if not, right? If not, then I'll take a break. That's all. Take a break. Okay. Right, Johnny. Yeah. Right? Well, Sharif, the other one is, that which does not kill me makes me stronger. Okay. So think of that in the context of trading. You can take a small loss. I really don't care if you have a losing trade or a couple of losing trades. It's fine. Perfectly fine. And the more you trade with, proper rules of engagement, proper trading habits, when you trade properly, most of the time you'll make money. Some of the time you'll lose and it'll be okay. But every time you lose, you learn a little bit. Okay? Every time you lose, you learn a little bit. It does make you stronger. And also you get more and more comfortable with losing. Amateur traders are so freaked out about losing because they keep losing so much and they're losing more than they're making, and it's horrifying. Right? But later on you'll find that when you find a certain level of success, you're not worried at all about losing because it's part of the gig. It's like a professional athlete's not, ashamed of missing a shot. It happens. It happens a lot, in fact. So you just see it as a numbers game because the numbers work out. Same thing with the casino. The casino knows that players win, players lose. Well, on the long run, the casino makes money. That's all they know. Maybe not this hour. Maybe the casino loses money today because there's a couple of big jackpots. But they know they're going to win, right? It's part of the business model. So you want to think of it that way, where, let's say 2/3 of the time you're going to have success. You'll be fine. Perfectly fine. All right. So anyways, look, interesting. This is too low for me. That's why I'm out. Okay. I'm out somewhere. I don't remember. I was out a long time ago though. So this one came down hard. Glad I'm not in. This one did not come down hard. And this one I'm still in. Cool. Great. So if Kiwi stays above the 21 and above the buy zone, and pound somewhat recovers, whatever that means, I'll have to make a determination. Whatever that means, I'll decide. I'll probably want to see this recover as well, and then I'll probably buy this one. Even though I'm watching pound and I'm watching euro, I'll probably take Aussie because I've been on Aussie quite a bit in the last 3-4 weeks, right? I've been on it a lot. It's produced. Okay. So I'll get back in, Now, if today New York is bad and we run into sort of something like this and we're down lower, let's say Kiwi dollar, tomorrow we're at 81.5. I'll have a much bigger attitude, right? I'll have an attitude adjustment over the next 24 hours, but not a bias adjustment. Good quote, Johnny. I like that. Right? The way I say it, though, 66% of the time, it works every time. That's actually that's from Anchorman. I'd show you the clip, but apparently I might get slammed. So you'll have to look it up. Here's a pound dollar. Oh, tickled, huh? Survived that, though. Holy smokes. Okay, looks like a 786 to me. Oh, is the title wrong? Interesting. Let me fix that. Whoa, 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 whoa. Whoa, 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 whoa. Whoa, oh, 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 oh. There we go. I've updated it. Can't find. You mentioned the Discord channel. Whatever. Just Wayne McDonald. Be shocking. You can't find it. 786 means, yeah. So like, for example, this is likely a 786. Okay. And so I talk about, let's say, it coming up, hitting tomorrow's target, which is now a double top. And then the probability of this is significantly increased. Do you guys know why? Okay. Let me ask you a question. Let me do a poll. Let's do it that way. Haha. It's funny how YouTube handled that. Guess I have to redo it. Sorry, YouTube won't let me do it. I was going to put in something really funny. Anyway. All right. I put in so many different things. I put in so many things. YouTube wouldn't let me do it. I put in like bulls, bears, and broke ass traders. I put in traders losing money and give up on Forex to start flipping real estate. And it wouldn't let me do it. It was pretty funny. Yeah, careful of that, Meta. I can't promote that because it is copyright. Yeah, and just be careful, right? Because I'm associated with what's going on here, so. All right. So anyways, yeah, I know, but I can't be associated with that kind of promotion. Just be careful. Okay. Thank you. All right. Who sells highs? Bears, losers, bulls. Well, if you said bulls, you're kind of right. You get half points because that's bulls taking profit. Okay, you get half points. That's not the question, though. Okay, you're overthinking, you're overanalyzing. And this is typically what happens. Undergrad students, right? They're thinking too much. You're thinking too much. Just answer the question. Bulls don't actually sell high; they take profit. There's a difference. Okay, do bears sell high? 74% of you said bears. That is wrong. You lose. Okay. Okay. The reason for that is bears sell reversal patterns like a double top. Okay. They sell here, right? They sell here, not here. So a loser would sell a higher high. It's like the dumbest thing you can possibly do. It's like buying a lower low. Like, how dumb is that as a trade? It's just dumb. Oh, look at that. My YouTube thing is off. Interesting. Let's see if I can fix it. There we go. All right. I don't know how long it was like that. Oh, this is off too. Hang on. What the heck's going on here? Interesting. But that's wrong. Hang on. Sorry. I just noticed the YouTube thing was off. Anyways, I'll fix it in a second. No, it's not a trick question. You just haven't been in college long enough or something, right? Or you haven't been in for a while. You have to answer the question. The question is, who sells highs? Losing traders. If you sell highs, you're going to lose all your money. And if you buy lows, you will lose all your money. I don't know if you'll lose it in a day, a week, a month, or a year, but you're making very poor decisions. You're basically a degenerate gambler, and you can get better odds gambling. At least you can get almost 50-50 in Vegas, which you're buying yourself 80% losers. So like it's really, there's only one answer. If you're selling highs, you're a loser. Okay, now maybe you're a good person, but as a trader, you suck, to be frank, okay? But if you're selling double tops or lower highs, now you got something, okay? So this is why I say 786 is interesting, because this predicts an upward move, and somewhere around here, which just happens to be a double top, okay, is an exit point, and the probability of downward motion is greatly increased now that it's pulled down. Okay, this little thing here tells me all this information. Up, maximum likelihood is here. It could even be lower than that, but let's just put that. And then this creates a double top, and if you get a double top, is the chances of a reversal, let's say down to here, increased or decreased? Well, increase. So all of a sudden we go from crazy aggressive bullish to like, uh-oh, and then all of a sudden, hell no. So like if something like this occurred, did you know I would just completely stop buying? I just completely stop buying. I'm out. For now, until market conditions change. Now, a less experienced trader would buy this, and they'd give all the money back. They made money buying here, which is easy, and then they're going to lose buying on the way down. Why would they be losing? Because they're buying low. So who buys low? Losers. Okay? Interesting, right? All right, so let me try to fix this stream. The stream got all weird. I don't know how long it's been like this. No one mentioned anything. They're like, Wayne, I can't see your charts. So I can kind of, this has to be done this way. Does that work for you, sweetheart? Yeah, that should be all right, huh? Yeah, everything's just slightly off, which is kind of interesting. All right, that's better, right? Am I referring to CAD? No. Okay, so let's look at euro dollar. Bada bing, bada boom. This is the trade plan from yesterday. You see it right here. My euro. Okay. Notice that we're one standard deviation below the mean. Yeah, you were seeing them made up, but everything was off a little bit. And I can see actually it's still a little bit, this is too high on the bottom. Whoa, 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 see? Young, not dumb. Do, 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 do. All right, so anyways. All right, cool. So right now, this is still bullish, but because it's on the the lower end of the channel, it's less bullish, but it's still bullish. Okay? One definition of bullishness is rise over run is a positive integer. Okay? And of course, that is represented by M. And M is equal to rise over the run, which for bullishness, okay, is a positive integer. Y equals M, there's the M, rise over run, right? Times X plus B. So you could restate this. Y is equal to the rise over the run. Okay? Okay? Times X. Okay? If you're going to, if you're going to do it that way, you got to isolate this plus B. So now you have to say, well, what's the rise? And what's the run? So over a period of time, let's say from here to here, that's the run, and then here's the rise, for example. Run. So so then you would average all that out if you're going to measure all that, but for this amount of time, how much does it rise? At one point it was here, so it was very bullish. For that little run, it had a lot of rise. Now there's quite a bit more run and less rise. Okay? So what does that mean? The slope, so M is equal to slope. The slope is equal to M. M is equal to the rise over run, and if it's a positive integer, then it's bullish. So a bullish slope is a positive M with a positive rise that creates a positive integer. Okay. So anyways, buy the dip, bro. Bro! Good deal, bro. Okay, guys, we buy the dip. Okay. Down here, not so much. Okay. And again, you're doing AX plus B, but you're from some foreign country. And in America, that don't count none. Yeah. So Americans use M. I don't know why. I don't know why she swallowed a fly. Same thing. You can use whatever placeholder you want. All right. Okay. Let's do some yens. Wait, we did all this already, didn't we? Yeah, sorry. Wow. Time's flying when we're having fun. So I want to see a recovery in the beast, even though I've taken profit on all that, but I'd like that to go up. I'd like this to go up. Luffle tullumum. So we're holding at 21. This is important. This is important. I luff it. Luffle. Okay. So remember, if this starts holding and this starts going up, I'm probably going to be buying some Aussie yen. Wink, wink, nudge, nudge. Okay. No, we did Aussie dollar already. And Aussie yen. So this is holding. This is trying to rise. And if I can get a little bit of follow through, I'm probably going to be buying this Aussie yen back. Cool, man. Cool beans. Love making money. Love it. Okay. Great. How about your biddy? Oh my God. Bitcoin. Yeah. Cool. Cool. So a lot of people are worried about a big collapse. This hits 65 or 70 and then it drops down to 20 and everyone's afraid. You notice that? Everybody's afraid. Everyone wants to hide in their bunkers. Okay? Maybe if you get 9 vaccines, you won't die. You know, you're going to die of a vaccine overdose. Everyone's afraid. And there's reasons to be concerned, but there's a difference between concerned and brave. And I'm not talking about vaccines anymore. That's just me sticking my foot in my mouth. But nonetheless, how do you handle uncertainty? You do your frickin' job. Right? That's all. We focus a lot on this in the day trading group. What's your job, right? Do your analysis. Does this say down? No, it does not. But I'm worried that, dude, shut up. That's right on your shoulders. You have a devil and you have an angel. Okay. And the devil's telling you, you're going to blow it. You're going to blow it. You're going to lose. You're going to give all these pips back. This is just luck. You're going to screw it all up and you should be freaking out right now. You should probably take your money and run. Take your money and run, dude. You're going to blow it. You're going to give it all back. You're going to feel stupid and you're going to feel dumb. And whoa, 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 dude. Shh. Okay. Let's look at what we know. Right? Steve's like, spot on, Wayne. Yeah. Whoa. And we're actually dealing with this. See, one of the things, this day trading group, it's amazing because, we do technical analysis and set up trade plans. But sometimes, not always, we do so much more. And last night was one of those great ones where people were opening up. And we were talking about the challenge that people were, the psychology of making too much money, having too much success. We're not talking about losing money anymore. It's people are like, we're worried about it all collapsing. I'm like, why are you worried? There's no bears, right? There's no bears. Like, what are you worried about? Well, I'm worried this is going to reverse. Why? Who the hell would sell this? Like, yeah, someone might take profit, but it doesn't mean you're going to get a whole market of bears. Like, can you imagine all of a sudden 30,000 traders with billions of dollars each, they all decide to they want to buy yen today? Why? It's almost never happened in the history of me trading. In the last 20 years, it's basically not happened. No, it can happen, but that's what you're worried about? Like, why don't you worry about asteroids? I mean, you can get killed by an asteroid, right? And you're like, well, I'm not that worried about an asteroid. Then what are you worried about? A bullish market in which you're making money, right? You're making up the fear. You're listening to the little devil on your shoulder. So instead, what's your job? We'll do technical analysis, for example. Just do your job. Does this say down? No. So why are you worried? You're riding the 5 on the 4 hour. You're miles above the 21. It's stepping up on all the dailies. And you're worried about a top? Dude, can you pick something else to be worried about? Okay? There's so much more to be worried about. Like one of the things I brought up the other day in a family discussion, I'm like, what happened to Syria? Did we fix that? Is that still going on or is that over? I remember there was millions of people displaced from their homes, entire cities flattened. There's probably orphanages everywhere. It's not in the vernacular of the American conversation anymore, but it was a year ago, 2 years ago. What happened to that? What's going on? Like someone should worry about that. That's a real worry. There's real people suffering. But you're worried about Bitcoin collapsing or pound yen dropping 500 pips, I think there are more important things to worry about, right? Okay. Richard, high CPI data for Canada means the Bank of Canada is going to need to raise interest rates somewhere in the future. Okay. So anyways, this is crazy bullish. Technical analysis tells me, remember, and I haven't done gold yet, but I'll do it. Technical analysis tells me that somewhere around here, okay, 66,000, I should consider taking profit. Which means if people do take profit, there'll be a bit of a pullback in which we can probably buy it on Friday or Saturday. Cool. That's what it says. Don't ask me my opinion. What's my opinion? How the hell would I know? My opinion is stay brave. Okay? But what does the chart say? Oh, somewhere around 66, take some profit. Cool. Probably come back down, hit this number, roll reverse, and we're long next week going to the next number. Cool. Right on. Cool. Nice. So how about gold? How about gold? Okay. I've been bullish on gold since the third week of September. Okay? Before that, it was coming down and I was bullish. So let's talk about that. Okay? It was coming down and I was a bull. What does that mean? Am I buying lows? No, because losers buy lows. You'd have to be a loser. Loser, right? Great. But what do I buy? I buy higher lows. I like higher lows. I like higher lows. And next week, a higher low would be great. Okay, I don't buy a low. I don't buy a low. I guess I should probably do X's for that. Okay? I don't buy that. I don't buy that. Well, I can try to buy that. Let me take that out. It was too early, but you could, let's say. But I don't buy that. Okay? So this is like, depends. It really depends what your thoughts are on seasonality and stuff like that. But the lower low would take you out very quickly, so you'd probably break even. But then you get the higher high. Oh my God, buy the higher low. Then you get the higher high. Great, buy the higher low. Then you get the higher high. Great. Right? Everyone in my day trading group has now been trained, right? Over and over and over again like that. What does the new high mean to me? Just sets up the next trade. Whatever. Okay? But as a bull, what do? I buy a double bottom, which is a reversal pattern, or higher lows. That's it. I don't do anything else. Okay? Well, roll reversal would be a higher low for a bull, or it would be a lower high for a bear. But yeah, Famobix, yeah. Right, inevitably an RR has to be, right? So a roll reversal is equal to a higher low. I don't know how to state this, I guess, or lower high, right? Seems like there's, right? It seems like it would have to be calculus, right? a role reversal is a function of a higher high or a higher low or a lower high. Would that be right? Does anyone know calculus? I'm not very good at calculus. I was taking an advanced economics class, and it turned out everything was calculus. So I had to kind of teach myself. I had to teach myself in the middle of Harvard doing like a crazy macroeconomics class. My God, that I got my ass whooped in this class. Pardon my French. Oh, it was crazy hard. And it was probably the best experience I've had at Harvard. And my professor was, or at the time, not only was he my professor, but he was a senior economist at the Boston Fed. So he'd work all day at the Boston Fed, cross the Charles River into Cambridge, and then teach me macroeconomics. And for me to just catch up, to do my homework, I'd have to teach myself calculus to follow his lectures and then do the homework. And it was a hard class. And it was interesting because it also told me that I don't want a PhD. Because, yeah, it was hard and it was interesting, but it also took the joy and the fun and the love that I have for economics. It took it away because it got too mathy, right? Too mathy. And I'm like, oh my God, I wouldn't want to do economics like that for 5 years where it's just all calculus and it's not common sense. So anyway, so I'm like, nah. But I'm glad I did the experience. But anyways, at least I got that right. Cool. All right, so we're making money, honey. See, it's not complicated. Okay. So these horizontal lines, I drew like way over here, maybe even to the left. And you can see it ended up playing somewhat of a role here. Okay. And a role here. And, you know, they were important. And they're important again. But maybe I can get rid of some of these, make it less complicated. Because we're through them now. We've used them. Okay. I can get rid of this stuff. This is me telling you how to interpret whether it's become bullish or not. And it didn't. As you can see, it broke through. Wrong one. Okay. So what I'll do is I'll extend it this way. So it was down, and then you have to anticipate the break. Now, here's the interesting thing. I don't think this is buyable, but this is the time when I said it had to go up on the last day or the first day. I mentioned it to you. I even talked about it with my wife. It's got to go up today or tomorrow. Okay. Now, if I had bought that, that would be a bet. I bet you my guess is right. But I don't bet. Okay. But once I got my higher high, the higher low, easy peasy lemon squeezy. Della, you're a student at Harvard? I mean, even as a student at Harvard, I mean, I had to get department permission to take the class. So literally the dean of my school had to allow it to happen, right? Because obviously, what am I? I mean, at the time I was in my mid 40s and it's a Harvard college class. Yeah, but you have to be a Harvard student. It's not like you just do an online class or something. So I had to get department permission. So the dean of my school wrote a letter to Harvard College because this was an advanced economics class, not just entry-level economics, and it was macro specific. And so I had to pull a bunch of strings and stuff. And as a funny story, I was so happy to be in the class that one of the days I flew to campus to attend it live because I was a distance student because I'm an old man, right? I have a job and all that. So I'm not a Harvard College kid, but I'm in the Harvard College class, right? So anyway, so I'm in the class and I just pick a random day and I was a little bit, I don't know. I wasn't sure what to expect because Harvard College kids are 20, 21, right? Like, and I'm 45, So anyway, so I show up and I walk into the hall. It's in the Science Center, if you're familiar with that one. So anyway, so I walk into the auditorium and I look around. I'm like, oh my God, there's tons of people my age. This ain't bad, right? There's a lot of 20-year-olds, but there's a lot of people my age. And I'm like, oh, what was I all worried about, right? Turns out it was Parent Day. It was Parent Day or Parent Week. So it was the kids in my class that brought mom and dad with them. And I'm like, this is cool, man. This is cool. Everyone's, about my age. And the professor comes up and he does the intro and then he says, oh, I'd like to welcome all the parents here during Parents Week. This is really exciting. It's great to have you in my classroom. And I just melted. I'm like, oh, you're kidding me. Shut the back door. No freaking way. Right? So, anyways, there I was. The gray-haired, the mighty silverback, right? Right? I'm the mighty silverback sitting there hunched over, trying to do his calculus. Now, the other thing I learned about Harvard is there's geniuses at Harvard. So I have 20 years of macroeconomics experience. I think I know what's going on, right? I can teach myself calculus on the side to do a class, at least enough, right? And I struggled with this class. It was hard. And the average grade was very, very, very low. It was hard for everyone. But there was about 5 students that were getting nearly perfect or totally perfect grades. And the amount of information came out in this class like a fire hose. We covered so much. It was so much information. And it was so difficult and so complicated. And the homework was so tough. And the exams were brutal. And I have 20 years of experience. And I did horribly. It was so hard, right? But that's the point of the class. But then there were other kids that were just 20-year-old kids that were getting 100% on everything. And I'm like, holy crap. And I swear to you, these kids were probably taken out of class and sent to some government laboratory, breaking codes and making big decisions. Just geniuses. They had to be. To be able to handle that at 20, you're a freaking genius. Like it was easy for them. Amazing, right? So I'm just like, wow, this school is ridiculous. So anyways, but yeah, if you're in Harvard College and you're like a third-year student or a senior, yeah, I'd recommend the class, but you can't just take the class. Right? An edX class is not Harvard. All right. Cool. So anyways, gold. Stanislaus says, hey, did I get anything out of that? I did actually, because we did study a lot of things that I already knew. So it was great to go in from different angles. Ultimately, what a class like that teaches you is fortitude and proves that you have discipline, that you don't give up and all that kind of stuff, which is really important in Forex. But yeah, inside of that, yeah, there's a lot I did learn. So like in my macroeconomics class that I taught in the summer, covering like the solo growth model in great detail. So I cover that in maybe 3 hours of lecture in the macroeconomics course. So I must have did probably 9 hours of lecture and homework and all that with the solo growth model at much more complicated level in that class. And it helped me shape the way that I'm thinking about the economy. So yeah, for sure. But just the confidence that you get through the class, and you're like, dude, if I run up to a challenge, nothing is harder than taking an extremely hard class at Harvard. And in the off hours, while you're trying to figure it out, you're teaching yourself calculus so you can try to do the homework, right? You're like, you're capable of anything at that point, right? You come out of a school like that and you're like, there's nothing I can't do, right? There's no level of difficulty that's too hard. And that confidence is important as a trader. You can't trade without confidence. So I don't think it's arrogance. I know it's like I have that capacity to work with a ridiculous, sickening work ethic, right? But inside of that, did I learn any practical tools and stuff? Yeah, there's a lot of different models, and then there's a lot of other things I learned. And it also shapes maybe the way that you think about macroeconomics. So I don't know. I was a macroeconomics guy before I went to Harvard. Now I have a degree that says I'm a macroeconomist. Great. And I do pretty okay. I listen to the radio and I watch experts on TV and I listen to them and I'm like, they're wrong. Cool. So before with real experience, I'd think about it and say, really, maybe I'm wrong. I don't think that way anymore. Okay, the charts will tell me if I'm wrong now. Okay, that's a timing issue. But my bias, I do not believe I'm wrong. I'm set. And if I hear other people's opinions, I say I understand what they're trying to do. Now they're wrong, of course, but that's up to their trading results, right? Hey, what's up, Pete? Peter's in the house. Right on, Meta. Right? So like when I talk to Meta now, I can say, hey, Meta, when investment, well, you can go even further. Savings is equal to investment. And if investment is less than depreciation, okay, then the steady state of the economy will shift to the left. Okay? And that the economy will have to start using capital and labor in new ways to shift that steady state back. That's going to require investment. Right now, investment is less than depreciation. So we're going to need to get back to the old steady state or even shift it to the right. You're going to need to invest so that you're above depreciation, which means you have to have capital to the alpha and labor to the alpha. Okay? And Meta would say, yeah, I remember that. And if everyone else is like, what the hell are you talking about? Well, yeah, you have a less macroeconomic intelligence than Meta does. That's all. Cool. So, oil. Okay, cool. We'll track that. If it comes down, there might be a change in progress. Right now, there isn't a change. So up, 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 buy the dip. Up, 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 buy the dip. Up, 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 buy the dip. Don't be afraid. Carlitos. So I guess that's it. I think we're done. Exotics are probably not a good time in the moment. So I think we'll just leave it at that. I'll put you back on the indices. Dollar's weakening, yen is not. So right now, I don't think I'm going to trade the rest of the morning. I think I have enough exposure and I need the market to turn. So I'll have to pay attention. I'm not on a lot of dollar pairs. I'm more on yen pairs. Oh, Rand is moving? All right, let's take a look. But my thought is if I can't get the market to resume what I've already put in, I'm not going to put more money in. So I might just play Far Cry 6 instead of trading. Yeah, dollar is weak right now, or trying to re-weaken. So yeah, you can see this. This is good, right? So here's this, and there's that. And that's where it's at. Okay, cool. The other thing you should notice is that, okay, M is equal to a negative integer, and the rate of change is increasing. So we went to bearish, to more bearish, okay, to very, very, very bearish. It's speeding up, okay? Slope is more negative. Okay. Boom, 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 boom. Okay, so that's really interesting, isn't it? Yeah, cool. So that's really good. Well, you need another pullback. Okay, so that one's good. I'm not even looking at exotics right now, but maybe that's my mistake. Cool. Peso's okay, but slow, right? So Rand is doing quite well. Love it. Cool. Well, I'll have to keep an eye on it. Oh, Mark, I was just saying that we went from, this is, by the way, this is a great way to end. This is a very, very bullish market that reversed like an old man easing into a hot bath. Look at this. It was up and then down, up and then down, up and then big pullback, high, right? Double top, double bottom, lower high, lower low, lower high, lower low. Okay? That's how the foreign exchange market reverses. Okay? Now, my seasonal opinion, okay? My seasonal opinion is on or about October 1st, USD ZAR would fall. That's it. on or about October 1st, which is right here. USD/ZAR would fall. Okay, now that's a guess, so I don't trade that. That'd be a bet. I don't bet. Okay, a big pullback. Does this make me bullish or bearish? Well, I'm a bear, so I can't be bullish. Also, that is bullish. A bull would buy that. So I don't sell this because that would be a guess. I don't sell a high. Only a loser would sell a high. Then you get the big pullback. You can't sell down there because I'm at support. But then it comes up and it double tops. So I can, if I want, sell that. Okay? Then if you look at this as a lower low, what do I immediately do? I look for the lower high. Then the new lower low, look for the lower high. New lower low, great. Check this out, y'all. All y'all. This is going to come down and hit here, come back up, and form a new lower high. And that's where the Wayne does his work. Thanks, everybody. If you're in my live trading group, I'll see you at 3 p.m. If you're in my live trading group, I'll see you at 8 p.m. And for everybody else, maybe join FX Bootcamp, fxbootcamp.com. Maybe open up a demo account at tradersway.com. Okay? I'll see you tomorrow. Cheers.